So hi guys, today we are going to learn about how the stock market works, because before investing in the stock market it's necessary to know how the stock market actually works. So basically there are two exchanges where the transactions take place: NSE and BSE. NSE is National Stock Exchange, where around 1600 companies are listed, and BSE is Bombay Stock Exchange, where around 5000 companies are listed. So the companies are listed in the stock market by the help of by a process called IPO, initial public offering. So how does this IPO work? Let's understand. Now let's suppose I want to create a company which goes by the name Pappu's company. Okay. Now I don't have enough money to start the company. Okay. So I reach out to my family members, my friends, whoever I can find. So I find two of my friends, Ram and Sham, who are willing to pay me money, but they want some stake in the company. So what does this mean, having a stake in the company? So let's suppose this is my company. Before they came, I have 100% control over this company. Everything earned by the company is mine, right? But they say that they lend money and the ownership of the company will be divided among us. Now let's suppose they ask for a 5% stake, 5% Ram, 5% Sham. So I have the 100% company right now, and of that 100% company, I give 5% to Sham and 5% to Ram. Okay. So after this happens, I start my business. Suppose let's start in, I open the stores in Delhi. Okay. And the business is running really well. I'm earning a lot, but I want to expand the business now. It's like I want to grow more money and I want to earn more money, right? So I plan of expanding the business apart from Delhi in the neighboring states, Haryana, UP, Rajasthan. Okay, so now, but for this, I need money, right? So I again approach to someone called venture capitalist. Okay, I'll explain you the meaning of venture capitalist in the end. So what these venture capitalists will do, again, like Ram and Sham, they'll ask for some stake in the company, and in turn they'll lend me some money. Now let's suppose the venture capitalist asks for a 5% stake in return. Okay, so now 85% stake is with me, 5% with Ram, 5% with Shah, and 5% with the venture capitalist. Okay, so now after this, my business is really growing well, Pappu stores. Okay, and I want to expand it even more. I want to take it to like 10 neighboring states or something like that. So I'll pitch another venture capitalist, and he'll again give me some money in return of some stake. So let's assume this venture capitalist also takes a 5% stake from my company and gives some money in return. Okay, now I'm really well expanded in around 10-11 states, and after some time my business is really going good, it's really profitable, and now I want to expand the company across India. Okay, so I have two options over here. Either I can approach another venture capitalist and give some stake in return, and second option, I can ask for money from the public. Yeah, you and me. Exactly. The public will invest in my company, and the process by which this is done is called IPO, initial public offering. And after this, our company gets listed into the stock exchange. Remember what I told you about Sensex, no, NSE and BSE? Yes. In either one of them or both of them, the company gets listed where people can invest their money into the company. So now with this example, I'll explain you the meaning of venture capitalists and angel investors. So in the previous example, Ram and Sham invested in my company before my company started generating revenue. I didn't sell any product till then, right? So the person who invests in a company before the company starts generating revenue are called angel investors. In my case, Ram and Sham were angel investors. After that, there were two people who invested in my company when I wanted to expand my business and I had already started generating revenue. Remember, those two people are called venture capitalists. The people who invest in a company after the company starts generating revenue. Okay, so with this example, I hope that you understood how the stock market works. And to get to know which companies are listed in the stock market, I'll put up the links of NSE and BSE websites in the description below. You can go to these websites and you can get to know which companies are listed. Just type the name of the company in the search box, and you can get to know if they're listed or not. Okay. And after this, there's another question. The transactions we do, the buying and selling that we do in the stock market, are they regulated by somebody? Is our money safe? Yes, it is safe. It's regulated by SEBI, Securities and Exchange Board of India. So you don't have to worry about your money. It's completely safe. Now, after this, there's another question that, okay, we got to know how the stock market works, but how do we know which company to invest in? How do we get to know which is the right company to invest in? How do we study the company, right? So for this, I'll be explaining about how to study the business model of the company, the annual report of the company, the financial statements of the company, and analyzing the ratios of the company. So in the next lectures, we'll be discussing about the annual report. And let me tell you just one more thing. If you read the annual report, you'll be ahead of 98% of the investors. And if you read the financial statements in the annual report, you'll be ahead of 99% of the investors. After that, it's just a little bit more digging, and you can make your money make money.